Hi, uh, good afternoon to you. My name is Satya Prasad, and I'm born and brought up in Chaudupal, which is just outside Hyderabad. And I come from a family of five. And my father is a government employee, and my mother is a housewife, and my two elder sisters are working professionals. I graduated in the year of 2022 from Satyabama University, Chennai, in the field of computer science and engineering. My strengths are I'm confident, energetic, and my interpersonal skills, such as communication, leadership, and analytical critical thinking skills. In CBOC program, I've learned uh, domain-related skills such as what is financial system, what are the different products involved in the financial system, such as equity, fixed income, derivatives, and so on. And also, I've learned core investment banking operations such as AML KYC operations, trade life cycle operations, corporate actions, and asset management. Uh, I want to utilize the skills that I've learned in this program into real life by joining into an IB firm. So, this is my brief introduction about me. So, coming to the topic today I'm going to give a short, brief presentation on what is money laundering and what is anti-money laundering, and how what are the different steps involved in anti-money laundering process. So let's start with basic definition of what is money laundering. So money laundering is nothing but it is a set of processes, rules, and activities that are designed to hide original illegitimate source of money and making it appear as a legitimate source of money. So that is the whole goal of doing this money laundering activity. And the illegal sources of money can be gambling, drug trafficking, terrorist activities, smuggling, awala, all any activities which are not in the purview of law are all considered as these illegal activities, and they are whatever money that you earn from those things are considered as money laundering. So typically, money laundering has three different stages. It starts with placement, and in the placement stage, the people will place the dirty money into financial institutions by using these two methods. First is smurfing, and smurfing they will open multiple accounts or fake accounts controlled by same persons. After that they will follow structuring. In the structuring, they will deposit the dirty money into these accounts below a threshold limit so that it will not flag to the regulators. So that is their whole goal. Second is layering. In this stage they will move money from one account to another account so that they can hide the original source of account where the money has originally originated from. So it is similar to like a onion, like it has lot of layers. So you can hide the original core layer, so no one able to see where the original monies came from. So that is what layering is. Third is integration. In this integration stage, the dirty money is directly formally used in the financial system by purchasing assets like financial assets like bonds, shares, or setting up businesses and so on. So this is the typical money laundering stages that happens. So to prevent these money laundering activities, to prevent this, we will follow anti-money laundering activities. It is nothing but it is a rules or guidelines given by regulators to financial institutions to prevent, to prosecute, to freeze, to monitor these money laundering activities. So, as a part of this money laundering activities, we will follow due diligence, client due diligence. This happens whenever we onboard a new client into our institution, into our bank or financial institution. It starts with first customer acceptance policy. In this stage, we will accept the customer based on regulations set by our banks or also and the regulators. So in the second stage, which is customer identification policy, in this stage we will identify our customers through legal and original documentation sources, such as if you take an individual, you can identify who the individual, who is the owner of the account by way of Aadhaar card, by collecting Aadhaar, PAN card, driving license, these governmentally authenticated original sources. And if you take a corporate, you can get to know what is a corporate doing, who are the directors and so on by using corporate of incorporation, memorandum of understanding, articleship of association, what are the directors numbers and so on, GST numbers and so on. So this is how we can able to know, we can able to identify who is the person, uh, who is the person that opening this account. Third is customer verification policy. After getting those details, we will verify the customer details through a document verification process from available authentic sources such as government details, government like tax filings, and so on. And here we will verify mostly what are the sources of their wealth and what are the sources of their income. Like what is the nature of the business and type of the business that they are involved in. And in the last stage we will give them some kind of rating from low risk to medium high risk based on different factors such as where the customer is located, what are the sources and wealth of the money, and if the customer is politically exposed, or where the location of the customer is, and so on. And who are the owners of the business, what are the nature, like if it is a privately owned or publicly owned companies. Based on these factors we will give them the customer different kind of rating. So we have three different kind of ratings to any customer that we will give. First is high risk customer. These customers are people who are in the power, like they have good amount of resources and good possibility that they might involve in these money laundering activities. They have the opportunity to do these activities. This can be politically exposed persons, like people who are in the power, so like collectors, so on. So they can influence the decisions in the system to get their benefits done. And later these can be high net worth individuals, sports stars. So this kind of people we will give high risk kind of customer base. And second is medium risk customer. These medium risk customers are anywhere from professionals, lawyers, from whom the sources of their wealth is visible, but there is a small amount of chance that they might involve in this, they might do money laundering activities. So for them we will give medium risk rating. Third is low risk. These are people who like salaried employees, low income people, or small business owners who are less likely to involve in these money laundering activities. So that is what we follow. And whenever we find, after giving them a rating, later we will do lot of due diligence. Like if you take a high risk customer, we will follow enhanced due diligence. That is, we will collect each and every document and verify it thoroughly. And whenever we want to onboard those clients, we need to get permission from a senior management. And if you take medium risk customer, we will, for them we will follow standard due diligence. It is simply that is. And third is low risk customer. We, for low risk customer, we will simply follow simplified due diligence. So, and next is sanction check. Sanction is nothing but restrictions put by the governments on people, on other countries or on people. So there are restrictions that you should not do business with those people. So overall, this is what anti money laundering is all about. Thank you, and if you have any questions, feel free to ask me.
Okay, Satya, can you please explain what are the techniques used in money laundering?
So typically they will use, uh, like, are you asking about the stages or what? I can't able to get your question correctly.
My question is, what are the techniques used in money laundering?
Yeah, typically they will use techniques like these stages, like PLI stage, placement, layering, and integration. And they will follow the technique. First they will open different accounts. Later they will transfer money from one account to another account, and later they will integrate into this financial system. That is the typical techniques that they follow.
Okay. Then, what is suspicious activity and how it is to be identified?
So we actually, as a financial institutions, we will get lot of transactions happening day to day. So for that, to monitor those transactions, we will use separate kind of softwares. So whenever we find a suspicious activity, like a lot of deposit is coming in or lot of like cash transactions happening, then we will flag those transactions as suspicious activity, and we need to report if we find anything happening this kind of suspicious activities, then we need to report it to a financial intelligence units of regulators. We need to report to the regulators. Yeah.
Mm.
Yeah. Any questions?
Wait a second.
Hmm.
Hello.
Hmm. Yeah.
Is it? Yeah, that's enough.
Hmm. Okay.